welcome to Foxon Media Digital. My name is Okeko. Today I'm joined by Stephen Strange, Head of Product Asset Management at Ion Group. Welcome, Stephen. It's good to have you on our channel.
Thank you for having me.
My pleasure, Stephen. So before we get started, could you say a couple of words about yourself and the work that you do?
Yeah, absolutely. So as you said, I had product management for the asset management side of Ion Group, so focusing really on the buy side, all things portfolio management, investing, order management, and pre and post trade compliance, and a lot of the regulatory oversight that we'll be focusing on today.
Okay, thank you for that. My first question would be on systemic risk. So, what factors have brought systemic risk back on the agenda for regulators of the global investment community?
Yeah, this is a great question. It's really the times that we're in now has refocused us to look at this once again. So we've all gone through the global pandemic, inflation is an increasing concern, interest rates are rising, and as a result of that, we did have the collapse of Archegos Capital, and we had some issues with the US regional banking, and as a result of that, that has given new focus to say, well, are we looking closely enough at this particular sector, and is more regulation needed?
Okay, so how might the concept of too big to fail translate to non-banking financial institutions, and what mechanisms should be in place to prevent their failure from triggering widespread financial instability?
This is a great question. So the NBFI sector is significantly large and growing, and it's nearly over 50% now of the financial markets. The NBFIs, when we talk about that, that could be an asset manager, it could be a crypto firm, it could be a mortgage broking network. There's a lot of innovation in this area. There's a lot of new players in this area, and there's a lot of activity. So as that is growing, and then we saw some issues around liquidity mismatching that led to the Archegos collapse and a few other incidents we've had, it really has allowed the industry to take a step back and say, well, what are we actually doing here? So we saw some work with the Bank of England starting to stress test and shock some of the data to see if they could simulate these events and prevent them happening. We see the Financial Stability Board getting involved and the IMF commenting on how we could focus on this section and reduce risk. But then it all comes down to going, what are you testing? Do you have the data to test and simulate which sectors need more focus than others? So it really does become an interesting debate that we'll be going through in a little bit more detail.
Thank you. So, if regulations are introduced, how can firms utilize technology to secure the data to meet heightened compliance demands?
So really with all of this, it's the data is key. So we are in a generation now or an age now that there is data everywhere. So the good news is we have data. So if I'm managing complex financial products and I need to report on them and disclose on them quickly, I do have the technology and data in place available to do that. Now, you have to have the right infrastructure. You have to have modern technology. You have to be able to check in real time your pre and post, your pre-trade compliance and risk. You need to be able to embed that into your portfolio management systems, and then you need to report on it if anybody externally requires that information, or more importantly, your risk committees internally need to be able to look at that so they don't end up putting the firms at risk. So it's being able to contextualize that data, digest it, analyze it, report on it in real time very quickly, so it's not resource intensive. That is really making sure you have the right architecture, digital infrastructure in place. And that's really where firms need to be focusing, that they're utilizing all these new technologies correctly. You can't be using spreadsheets and going querying databases and going back in time looking for this information. You need to leverage the advancement of technology that's available to get ahead of this and reduce any risks going down the road.
Okay, so what lesson can we learn from historical instances of systemic risk, and how can these inform approaches to managing risk within the investment community today?
So this is a really good question, and a lot of the regulators and bodies out there look back in time and go, well, should we do a lesson learned approach? So, back in 1998, there was a similar issue where LTCM Capital, that was a crisis there that ended up having to be a bailout. So we looked at that triggered more regulatory focus with Basel III. And similar concepts have happened time and time again to say, well, let's tighten up our controls, let's tighten up our reporting. So I think that's really where we're going to see these conversations coming, saying, well, we've seen it before. Yes, it's a heightened attention now. Is the problem getting worse? Can we use some of the frameworks that we had and then expand upon them to make those better? Now, the challenge is, as I said, it's an ever fast-paced, ever-changing world, and it's being able to know what to test is really the challenge here. And that's where I think we're still quite early on in the debate.
And how can international cooperation be strengthened to ensure a cooperative approach to managing systemic risk on a global scale?
So this is where the true debate comes, because we're not just talking that this is a European problem, it's a US problem. Yes, some of the events have most recently come out of North America, but this is a global issue that requires the attention and consensus of all the major players here. So this is where it's really going to be interesting of finding a definition of what is risk, what should we be looking for, what disclosure is needed, is that data available? Do firms more need guidance rather than true regulation? And I think that's really an interesting area, that these are frameworks and guidance that you should be doing and disclosing internally rather than us all trying to globally meet one requirement. I think it'll happen, as it already is, that Europe will, the UK will are doing some of their work, as we mentioned before, the EU focusing on this as well, and the SEC certainly pushing forward and actually adopting some regulation now as we go. So they all have subtle differences, but having a united front, I think, will be key. But it is a very complex problem. We look at APAC, we look at China. The definition of NBFIs and shadow banking in China differs. So it differs between jurisdiction. It differs between all these different authorities and financial regulators. So I think we just need to have a joined up voice, more community discussions, and really kind of focus on what is the problem and what are we trying to resolve.
And lastly, looking into the future, how can a balance be struck between mitigating potential systemic risk and innovation?
So this is really interesting because, as I said, the NBFI sector has rapidly grown, and we are fortunate enough to have innovation and some of the competitive advantages that come of that, and lower interest rates and new products and new areas that we can invest in, all comes from this innovation. So you don't want to pause that through over-regulation. And I think everybody agrees that some better risk control can be in place, but we don't want over-regulation for the sake of it, reporting for the sake of it. You know, some firms, not every firm has huge departments and unlimited resources to do this reporting, so there has to be striking a balance. And I think that's where we're going to see more position papers. I know FMO released their position paper on how we can have more supervision, and we can also look at guidance versus strong regulation approach. I think that's really where the debate needs to be, and where the conversation will continue, likely for many years to come.
Well, thank you, Stephen, for sharing some insights with us today. Looking forward to your participation at TSAM New York. Thank you all for watching. Be sure to follow our YouTube channel for more content on all the latest opportunities and challenges in asset management, wealth management, and ESG. And don't forget to give this interview a thumbs up and hit the subscribe button.